Hey, good morning, my neighbors. Welcome to another episode of BYTTT. Before you take the trade, if you haven't hit the like, subscribe, and the bell button, it would be a good time for you to do so. Uh, After quite a bit of discussion and trying to plan everything out, I think it's probably going to be a better product if I just do this as pre-recordings. I really like the way it came out on the last episode, so I'm going to be sending them out a little bit more earlier. I think what I'll do is, for those that are curious, I'm probably going to do them the night before, get them completely prepared, and have them already set for you. Um, it is a lot of work to get up at like 6, 7 o'clock in the morning, get everything prepared, and then pushing everything forward. Um, like, for example, I'm about to give y'all all the insight and things that we are going to cover in a quick bit. Yeah, got that, got that. Oh, this was going to be about 2 minutes, and then yeah, so it's gonna be a lot more interesting, I think, and plus I can make it much more engaging content at the same breath, so that way it doesn't feel like um, it's a lot of back and forth ish. I guess I don't know. I have to say because the kind of give y'all a little context. I usually prep the shows the day before. I already have most of what I need. Then I wait for the morning to get like new updated in the news and everything else. So trying to get that all coordinated does require me to wake up around this time and get started with the show. So for this one, I'm gonna kind of they get the meat and potatoes a little bit. Instead of me going through my earnings cycle and recap like I normally do, I'll be doing my. Um, I'm gonna do it on the fly a little bit, right? I got most of it on there, but without further ado, let's go ahead and get it completely and utterly cracking. Let me get my spreadsheet on this side. That way, I already have it ready and set. Just set to the wrong side. Get here. There we go. All right. So without further ado, let's go ahead. I'll probably chop that up, but that's all set it up, but we'll get there. All right. So first thing we're gonna go ahead and cover is the news. So what do we have today? So today is when we are getting some housing starts, and this is the one that's probably the most critical. I think we're gonna get a lot of noise until about 10 o'clock because 10 o'clock is going to be that Michigan sentiment. Michigan sentiment usually makes some moves to the market. And that said, it's probably going to be one of those things that you want to kind of like really, really, really line up. Um, Maybe get out of your trades by 9:45 if you have a small amount of profits. If it's something that's healthy and you want to risk it, absolutely understand that this can really flip the entire market. Yesterday we put in a very, very long candle that looked like we're going to get some continuation out of the NQ. Nice curl of the Stoke. Um, Very, very sound type of setup if you really, really think about it. So just keep that in mind. Also, the housing starts is going to be around 8:30. I think this can also have an effect. The reason why housing starts is probably going to be important is because there is some conversations that housing has been kind of like slowing, prices are coming down, and everything under the sun. So keep that in mind as well. So we're going to see how that kind of plays with the market and see if there is some opportunity. Uh, get some work done at the same time. There's some opportunity for you to be able to play like your DHI, your LEN, sorry, DR Horton, or your Lennars, KB Homes, Toll Brothers. Those are the ones that's going to probably be affected by the news that comes with the housing starts and building permits. Building permits, you got to put the permits before you can start building the houses, and then the housing starts coming today. So it kind of gives you a perspective of what's going on that sector. All right, so without further ado, let's go ahead and get into the rest of the news. The first thing I have for y'all, consumers are pushing back against recession, right? It's they're thinking that the recession is kind of like not really there. That there is it depends on the perspective. It depends on where you are in your life. It depends where everything around you is going. Like, for example, if we go to some of the retailers, like Nike, for example, uh, Nike is starting to get a little bit of a rise after. I think they got below their pandemic lows. Let me see. I think they got it under there. Yeah. Here's the pandemic low right here, around $60, and we got into like the 52s here. But then we got a nice little sweep. So could it be that we were trying to get for some of the retailers to get under these pandemic lows, so that way they can go ahead and reposition themselves, get some capital? I think Nike's a strong enough company that doesn't need to be around $50 a share. They did have solid earnings here. I would love for them to return more money to shareholders, but I think it's just stagnation, especially when they were doing the direct to consumers. Let's see if they can fix that problem. So seeing this kind of lets me know that, hey, you know what? There's a possibility that people are really trying to make some moves, make some adjustments, especially companies like Nike. So keep an eye on retailers because tech has been running so heavy. But again, this is not the time for you to jump into something like a retailer's because again, like I said, when it's posted on the news, you know what I'm saying? It's sell the news, buy the rumors. Let's go ahead and keep this going. We got wrong one. All right. We have HSBC says CoreWeave shares will drop more than 70%, right? And if you don't know who they are, I want to say this is this is the software company because I sometimes I'm kind of mix them up with Core. What was that other one? There's one that's it's called Core something that in the prison build out and prison. Let's see if I can find theirs. Core. Yeah, core I'll look for it another time. But yeah, so they're thinking that Core Weave is going to drop about 70%. Again, this is something that actually was IPO'd back in March. It has a nice little pop. And right now it's starting to kind of like pull back. You can see that this is its top. Not the best time for you to invest into something that just started in the middle of March. But, you know, they had a nice little move to this upside. It looks like they missed their earnings by a lot here. They got their earnings coming up in the middle of September, and yeah, this is probably going to be something that you want to kind of keep in your radar. Drops more than 70% on concerns about customer base. Now, listen, at the end of the day, they were already a negative EPS with negative 600% off their first earnings that they released after their IPO. And then coming to here, they got to stay in line of that one, or else it could get really bad. But yeah, I would say maybe somebody fudged the books. That's the only thing, because why is it rising like this into that space? Let's see. They actually, namely Microsoft, OpenAI, and NVIDIA don't use CoreWeave services according to SemiAnalysis, which is probably one of the biggest, largest size of reason why people are invested into it. And right now, it looks like they got a couple of things here. Strong buy, nah. Hold could be a position. I would say if you're going to hold, it's probably going to be somewhere around this area here between the 100. If it breaks this 100, it's probably going to drop all the way down. So very concerning for those that invested into Core Weave. All right, let's keep this going. Trump firing the Powell could backfire and lift interest rates. So, okay, everybody already knows Donald Trump wants Jay Powell to lower rates. Cheaper money means better economy. Better economy makes it seem like the Republicans are doing what they're supposed to do. Cheaper interest rates also makes the dollar drop as well. So, we got to bolster our economy. So it's like, which one do you really want to kind of give up? I think Jay Powell is doing what he can. I do think that there was a couple nuances that he messed up in the beginning during the pandemic, and unfortunately, he's getting a lot of backlash for that. So just kind of I wouldn't change him at this late in it. Let me see, it was in 2025, so yeah, I wouldn't change him yet. I would say maybe 2026. Maybe this is just smoke and mirrors to kind of get the economy moving a certain way. I did tell y'all and warn y'all that the dollar has been putting in bullish divergences, just like the one that you kind of see in here. So there is a lot that's going to be happening here. And something like a Jay Powell lowering interest rates a little early could eliminate this whole entire bullish divergence. But overall, I think it just makes no sense. I don't think it's going to lift rates because whoever he plugs in is probably going to be someone that he plugs in that's going to lower it. So I think that's another smoke and mirror in itself. But how firing Trump Powell could backfire. It just, again, if you want to read this article, it's inside of CNBC. I do suggest y'all have that. You can check that out. But yeah, it's just right now. This is just that smoke and mirror kid games that they usually do. So let's go ahead and get into the earnings. We got quite a couple that's coming in. One of them is MM. If you haven't been watching me, I've been talking about this ever since the break of the 148 level. Very, very solid move. Looks like their earnings was on point. I like them because, again, the lawsuits are behind them. This is going to be one of those sound tickers. This is going to go ahead and continue to recover. Do I think that it's going to get back to 212? Probably not. Could it be that we're now at this order block and we're going to get some type of pullback? Very possible, especially the fact that pre-market where it got to that 162. I would love to see what they do with this. One of my biggest concerns is probably here to see if we can get this trend line to be respected. I don't think it's going to get down to $92, but I think it's going to take some time because this one can consolidate. If not, and we stay on this trajectory, hold on, I kind of screwed that one a little bit on this angle. Because I was like, wait, 92? That doesn't make any sense. I think we could easily consolidate into, around this area and then go ahead and get into that 163. But being that we're on this sharp angle, I want to see what they do with this trend. We were forcing a death cross on the monthly. This is what made me very bullish on here. And I saw this recovery. I saw the multiple tests. And I said there's no place else but to go up on here. So yeah, we'll see how this trend continues. But I would say this 163, 164, somewhere around that ballpark is probably going to be a tough resistance. We can see historically it has been. So I want to keep an eye on that level. If we blast right through it, then yeah, I could see new highs in 212 and everything else. But I would love to see a nice healthy pullback coming back to this trend line before we take off. And like I said, you got to love companies that return money to shareholders. All right. And then another one that we're looking at is Schwab. Charles Schwab. All right. Now, Charles Schwab is in a very interesting spot. Like I said, the way this ticker has been moving, especially with their acquisition of Thinkorswim and TD Ameritrade, the whole nine, I like where it is here because we're starting to really open up this whole entire EMA structure that's here. Now the question is, what level can it get to? And this is the one I kind of had a little bit of battle with myself over and over, trying to figure out. I think it's going to get to $100. I think that's the real number that they're going for. We kind of drifted to this level. I think this earnings is going to be solid. I think they're still making money. I still think that they're returning money to shareholders. I think it can get stagnated if the rest of the banking system gets stagnant. The way Charles Schwab has been coming into the market, they were looking to be kind of like your JP Morgan Chase to a certain degree. And I don't know. I would say banks as a whole are a little overheated. Here's JPM. You already can see it was getting a little tight there. Here's BAC. It's starting to get tight. GS. Oop, wrong GS. GS. Right? Starting to get, well, GS looks a little bit better than the other ones. Morgan Stanley. It just feels like whatever was happening around the month of October, November is almost like where everything in the banking industry is capped. Okay, there we go. Right, I think it's capped in its regard. So there's a very strong possibility that this thing could be tapping out here. But if it does do like a Goldman Sachs, $100 level is probably where everybody's going to target. All right. Okay, so let's talk about earnings that's going to be coming up on Monday. The first one is going to be DPZ, Domino's Pizza. They've been very stagnant. They need some type of catalyst. A strong earnings could be the one that breaks out of this wedge on this monthly. If we look at it on a daily, it doesn't look as bad in itself. Come on, get there. But it is looking very light. Had a major drop off from this 542, which makes me kind of concerned. I think they probably guided something that was a little concerning. EPS is $4. Let's see, we got EPS 419. That's not too bad. EPS, it's staying in line. I would say revenues is dropping. Yeah, I think revenues is dropping. They had a nice spike on this one here, but still dropped. That's very interesting. I think it's just because of the EPS. But yeah, I would say, oh, you know what? Now I think about it. Holidays, December. No one's. Oh, maybe playoffs. Like I'm trying to figure out why Domino's Pizza would be spiking in the fourth quarter. Let's see. Let's look at previous fourth quarters. Out of curiosity. It's not December. Yeah, they end they usually end up around 1.42 on revenue during the holiday season. Very interesting dynamic. Would never think. Again, numbers don't lie. I'm a big proponent of that. So yeah, 1.43, and then it drops off, and drops off, and then drops off, and then fourth quarter it's bang, just like that. So yeah, so I would say anticipating not only this quarter but next quarter is going to be around that one. Maybe it consolidates, and okay, this fourth quarter it did pop. Yeah, popped up to this level, kind of giving us our resistance. This fourth quarter gave us this pop and trended. Yeah, I would say maybe get a little bit more consolidation. We're probably going to get another reset of the oscillators after this earnings. And then maybe a bounce off this 800, getting back to the 200 possibly. But that could be one of the moves in that regard. Let's go with NXPI. NXPI. Yeah. This looks like we're going to do something major to the upside. Now, this is a semiconductor, so I'm a little apprehensive, especially with all the NVIDIA stuff. And maybe this is a little bit of a warning that this could go up some more. The reason why I'm saying that is because if we look at NXPI here, look at this. It's like we're putting in this morning star here right there. And the stochastic is crossed there, and we're in the bullish side. We get in a golden cross, which is an added confluence. We have fair value gaps that we didn't finish complete here. Very interesting. Could we be just waiting for contract expiration for the month of July, and then this thing is going to give us that rally that we're looking for? I've been very concerned about the tech industry, and I'm just like, okay, QQQ looks like it's overheated. There's going to be a major pullback, or whatever the case may be, right? But something like NXPI having some solid earnings could give a little bit of that first shot that NVIDIA and everybody else is going to be doing very well in their earnings, especially being in the semiconductor space. Ooh. Actually, let me put this in my watch list. I'm going to put this in my go to investors. I am curious. How much is dividends? It's only $1. Going to be very interesting. Keep an eye on NXP. Actually, you know what? Let's do some top down. We might be able to find something. Get rid of this. Yeah, look at that monthly. That looks really good. Going to the weekly. Weekly needs to cool down a little bit. But the MACD is crossing the zero line right now. This is going to be very interesting. And it's Monday morning at that. All right, so here's my take. I'm not saying that you want to play anything over earnings, but if you can, anything below here is of a concern. So as long as we continue to close above here, I am aiming for this to get destroyed. $245 calls, if the contracts make sense. $245 calls for August. Anyway, I'm not a fiduciary. I'm not a financial advisor. I'm just a guy that looks at the stocks, and I just love seeing what I see. So yeah, that will be very interesting to see how the market responds to today. Especially, we had gap, 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 and gap, and then if we go over to NQ or QQQ, and we've been drifting up. So this one is kind of like in that laggard, almost like they probably were sweeping for liquidity here, knowing that this was going to go ahead and give that golden cross. Very, very interesting concern here, because whatever happened here, it spiked up and just fell for the rest of the day. So they gapped it up. Must have been after earnings. Oh, this is February. This was one of the first ones that sold off for February before the April rally. These are market positions that really impacted many, many items and sectors in the market. Huh. Very interesting. Yeah, I'm thinking about calls on this one. I'm really thinking about it. All right. So what I like to do, I kind of like to run through our earnings, and because this earnings cycle is pretty much underway and we got 2 weeks to it, I'm just gonna do a quick run through of all the items that's in the first month. So the first month that I do, the ones that I keep up with, I should say, not just the first month. Let's start with Netflix. So Netflix had this whole entire uptrend. You already know it's been a behemoth. We broke through the downtrend. I think they were trying to reaccumulate here. So just keep that in mind. We're down pre-market, even though they did solid on their earnings. But again, this could be they priced in something major like a surprise, and then it's now lower only because of the fact that it's at this point. So just keep that in mind that Netflix probably can tap to this line. That's what I'm kind of leaning to, like get back to 1300, but notice that it can't make higher highs and then fall. That would give us a strong July close on Netflix. Right now, it is a red candle in July, and that's a little premature. I don't think it's going to end that way. Meta is being a little annoying. For those that know, I have a tiny position on this bad boy, but we'll see what happens with that. The weekly does look like this, like it's going to fall, which is not a fan favorite of mine. But I am looking at the $700 level to see if it's going to hold. Part of my trade was built on the fact that this monthly on Meta, that it was going to go ahead and give us one more high before it just says buy. But again, there is bearish divergence shown here, and that was the risk I was willing to take. So very interesting on this daily. Let's see if they can build this base right here and go from there. So it's nowhere near my stop loss, so we'll just go ahead and just enjoy. Not worrying about ISG. Microsoft still drifting up, still going up, still not playing with anybody, especially when it held its base at $500. I do think that this is just mostly froth, so I'm very curious. Are they going to retest this? What I would love to see is the retest of this 50. But what I would love to see is how they're going to react when price gets to here, which would bring us into that 493, 488 level. That can be very tricky on this ticker. Let's see, Lockheed Martin. I'm thinking that there's going to be more downside. I don't like how the weekly is set up. Very consolidated, very bear flag looking. So I'm thinking Lockheed Martin to get under $400. HCA, they didn't really capitalize on the fact that UNH is failing. I was looking for them to break out of this area, the 394. They are failing to do so. I think more downside. Royal Caribbean is just not chilling. I think they're a really, really good company, real strong, return money to shareholders. I think it's great. But I am extremely surprised on how far it is. Lots of fair value gaps that's sitting here, so they could really pull this back. So just keep that in mind. I'm not going to go over Wingstop. Tesla. Tesla is sitting on top of an order block. I do think that Tesla can get higher, but they got to get above 323, 325, maybe even 330 before that can happen. This will bring you into that area of knowing that there's support at this area to take out 350 and then get back to its regular scheduled program. But again, this is one that is getting a lot of backlash from, I think his political ambitions is hurting the company. So we'll see what happens there. JP Morgan Chase kind of went over this briefly. I think it's a little toppy. I think it needs to come down a little bit. It's building a base here, but if we look at this weekly, I think it's been running for a while. Nice little pullback to like a 618 would be great. UNH, anything under 300 is supposed to be coming down, and I think this earnings cycle is what they're waiting for. We'll see what happens. IBM, a nice pullback, sit on top of an order block. I think it could bounce right here. I would say wait for tech to, first blow its top. Go ahead and continue to the upside. Looking at NQ and everything else, but a company like IBM, we're really wedging against support, and that can really hurt this. All right, BA is another one. This thing is going up. I think it's going to go ahead and consolidate or come down very, very soon. Earnings is after the 29th, somewhere around there. So we'll see what happens. Nice little solid run up though, because after this earnings, this thing just took off. T-Mobile, I think it got more downside here. I really should have taken it serious for the downside as soon as it got close to here, because I felt like this had more weight and this had more weight than this had. And we were still kind of like in the bear style. I thought this was just a pullback, but it was just such a massive move. We're talking about from 221 to 240. That's a $20 move. I thought it was part of the reversal, so I kind of left it alone, but you can kind of see we're starting to get more into that death cross, which is what was its trajectory over here. I thought it was going to do something like this, break out, and then just continue down. Maybe they'll retracement, but this is almost 100% retracement of this M, and you can kind of see it's kind of like a channel, just literally beating people up. Look for this to get to 208, 200. Waste management, it's a little toppy. It's been getting itself beat up too. Downward trend. They're trying to use the 200 as a good bounce area. Let's see if they can. Earnings is coming out on the 28th, so look for this to give you at least a spike up before earnings. This is WD-40. Apple. Apple is lagging. That's it. Nothing more to say to this. It's lagging. 213 was the level I was looking for them to bounce. It struggled. 213 is now its resistance. I'm thinking more downside, getting back to 200 again, and seeing if they can get some more friends and then go back for 213. But right now, downside. Restaurant Hardware. Johnson & Johnson had a nice little gap up after their earnings, which is just modest. But again, this is Johnson & Johnson. Sometimes this thing can do some craziness. I think they enjoyed the rally that everybody else got after April, after the February drop-off. I think this is just that pent-up orders and frustration, so that way they can go ahead and rise up. 3M, I just went over quite briefly. You already got that. Raytheon, we're probably gonna get a nice little spike continuation because this thing is just still taking off. They do have earnings on Tuesday, so I think it probably could pull back at earnings. But right now, is just on this upward trend line. And if we draw a trend line capturing every single high low, it will be here. And then this is our pivot right here. They didn't even let it touch the trend line, and we made new higher highs. So when they knock these guys out, I use them as support. 150 is going to be the make or break area. CVX got a nice little bump and run that is turning a micro trend into a major trend. This was our micro trend going into major trend. The pivot that they would have to go ahead and attack is probably somewhere around here or here. So I think maybe CVX can get to 168, but that's a big maybe. I do still think that oil is not going to go far. DHI, you can see the rejection. ZOM, same thing as CVX. AZZ is for investment. UPS is still building up their position. I thought we could really fill into this gap, continuing into this area and then reject here, but I think they're pulling it back because they know they're going to attack here. So I would say UPS sometime in the near future get into 112. I am targeting this 200 moving average, so we'll see if we can get that. Charles Schwab, looking good. Starbucks, I think it could get back to 95. Citibank, so mad at myself. If y'all been watching the show, I've been talking about Citibank ever since the $78 level. Didn't take the position and kicking myself for it. PVH, investing. Newmont. Newmont is starting to get a little toppy. I think they're putting in bearish divergences. It needs to kind of like get a nice little scoop at maybe a fair value gap or a gap, and we'll see what happens there. Same with FCX. Alcoa, it got up there and then they rejected. Good solid return for shareholders. I would say, you know, I take that back. I think they came for the fair value gap, rejected, came down. Earnings were solid. This could have been, or we probably go recapture here. The weekly is tired. The monthly just started. Didn't get the rest of it. Yeah, I look for our core to get to 32.85, somewhere around there. Maybe even a little higher. Maybe even 35. SoFi is still ripping and roaring. And then American Airlines. So that is all the tickers that is on that side. That said, I want to say thank you very much for participating. Don't forget to click the links down below. I am doing my one-on-ones. They're back open. So go ahead, click the link down below. That way you can go ahead and sign up for my one-on-ones. They are open. That way you can get yourself back in stride if you are struggling, or if you have some questions, comments to become a better trader, I can assist you there. It is totally free. Also, my charts are available. If you are having troubles with the charts and you're trying to figure out how to mark everything off, go ahead and make one of those purchases. And listen, if you're not satisfied by any means, it doesn't matter what the reason is, you get your money back. It's just that simple. But I can help you get to the point that you need to get to. And that said, that's pretty much it. And I will see you on Mindset. If you want the link for Mindset, go ahead and DM me on Instagram. Also, I will be back here again on Monday. Like I said, it's going to be all recorded now, just to kind of clean up some of my flaws, being super early in the morning. And the plan is to have it prepared for you well in advance and well thought out. That's it. Thank you for participating. Thank you for watching. And thank you for sharing, liking, and subscribing. I'll see y'all.